Let's start with this interesting article from CoinPaper, because what it's hinting at feels way bigger than most people are ready for. Franklin Templeton, yes, the trillion-dollar giant, might be about to drop a shockwave on the XRP market, and the timing could not be better. If Canary Capital pulled in $58 million on day one with their XRP ETF, imagine what happens when a company with over $1.6 trillion under management steps onto the field. And honestly, that number alone should make anyone in crypto perk up and pay attention, because that level of capital doesn't step into an asset class unless a serious strategic motive is behind it. Welcome back to Gold Rush Crypto Daily. If you're new here, this is where we break down the biggest crypto moves with real talk, real reactions, and a whole lot of excitement. Today's video is high energy because we've got two massive stories that connect in a way that makes the XRP narrative almost impossible to ignore right now. If you're part of the community, smash that like button early. It helps more people find this channel and keeps us growing strong. And if you're new, hit subscribe and turn on notifications so you don't miss any of these deep dive breakdowns. Quick reminder, nothing in this video is financial advice. I'm just sharing the news and my opinions, and you always have to do your own research. All right, let's dive into this first article. As you can see on screen, CoinPaper is reporting that Franklin Templeton could be next in line to launch an XRP ETF after Canary Capital's explosive debut. According to their coverage, market analyst Ripple Bullwinkle, great name by the way, believes that Franklin Templeton's recent on-chain activity is a major signal that they're warming up to blockchain-based investment products. And honestly, this lines up perfectly with what we've been seeing. Franklin Templeton has been quietly dipping into tokenized assets and experimenting with blockchain rails for years, so an XRP ETF isn't just realistic, it feels almost inevitable. Let me read you this part directly because it really captures the scale of what's happening. With deep liquidity, global distribution power, and unmatched investor trust, institutions of this size don't just attract inflows, they ignite market-wide capital migration. That's huge. That's not just hype. This is literally how legacy finance moves. When a trillion-dollar brand enters a lane, every other giant watches and asks, do we need to be there too? That's the psychological shockwave the article talks about. It's not only the fund itself that matters, it's the message it sends. If Franklin Templeton goes live with an XRP ETF, suddenly BlackRock, Fidelity, Invesco, and the rest of the heavyweights have to reevaluate their strategies. And think about this. If Canary Capital, a relatively small player, pulled in $58 million in one day, what happens when a firm like Franklin Templeton enters? We're not talking tens of millions. We're talking hundreds of millions, maybe billions over time. And the article even suggests that an approval could come as soon as November 18th. If that happens, you can expect derivatives, structured products, wealth management integration, the whole machine firing up all at once. This is how institutional adoption goes from maybe to here we go. Now hold that thought because it connects perfectly to our second article, and this one absolutely blew my mind. We're switching over to Cryptopolitan now, and as you can see on screen, the headline says it all. The first U.S. spot XRP ETF has already attracted $243 million in net inflows. That's on top of the $58 million of day one trading volume. And here's the punchline. It took the #1 spot out of more than 900 ETFs launched this year. That is absurd, that is historic, and it proves that demand for XRP as an institutional-grade asset is real, not theoretical. Let me read some of these numbers directly. Bloomberg analyst Eric Balchunas initially predicted $17 million in inflows. The fund cleared that in less than 1 hour. That's not normal behavior. That's demand. That's pent-up interest. That's institutions and high-net-worth players saying, finally, we have an XRP vehicle we can actually touch without breaking compliance rules. And while all of that is happening, look at this contrast. Bitcoin ETFs saw almost $500 million in outflows. And over the last few days, more than $1.6 billion pulled from Bitcoin ETFs. Ethereum lost $177 million. That is a serious market rotation. I'm not saying Bitcoin and Ethereum are failing, far from it, but these flows tell a story. They tell you where the curiosity is moving. They tell you which altcoin is getting the institutional spotlight. And right now, that spotlight is bright and it's hitting XRP. Here's another piece from the article. XRP is trading around $2.27, down slightly, even after the ETF excitement. That tells me one thing. The market does not fully understand what's brewing yet. If Bitcoin dropped below $100,000 and Ethereum slipped under $3,360, but XRP continues pulling massive ETF inflows, that's not accidental. That's a divergence. And now, here's the kicker. Ripple's CEO Brad Garlinghouse just announced a $500 million strategic investment from Fortress Investment Group and Citadel Securities at a valuation of $40 billion. That is the kind of move companies make when they're gearing up for something big: expansion, scaling, global positioning. When you combine that with ETF inflows and the possibility of a Franklin Templeton filing, the picture becomes a lot clearer. This is why I always tell viewers, follow the flows, not the noise. The noise says crypto is crashing. The flows say institutions are reallocating. The noise says XRP is boring. The flows say XRP ETFs are outperforming everything else. The noise says ETFs don't matter. The flows show hundreds of millions of dollars moving in real time. Now let me tie these two articles together without forcing it. Canary Capital's ETF proved the demand exists. Cryptopolitan's breakdown proves the demand did not slow down after launch. And Franklin Templeton entering the arena would take that demand and multiply it. Think of it like opening 3 doors in a row. Door 1, regulatory clarity. Door 2, ETF approval. Door 3, a $1 trillion asset manager stepping in. When those doors open sequentially, capital doesn't just flow, it accelerates. And here's the funny part. People still doubt the XRP narrative. They say it's too slow, too old, too corporate. But institutions don't care about memes. They care about predictable settlement, compliance clarity, and global payment rails. And that's exactly what XRP offers. If you're enjoying this breakdown and you want more videos like this every day, make sure to like the video and subscribe. It really helps this channel grow, and it keeps the energy high so we can continue delivering top-tier coverage. And hey, drop a comment telling me whether you think Franklin Templeton actually pulls the trigger. I love reading your takes. Now, before I close out this breakdown, I want to zoom out even further and talk about what this could mean for the broader crypto ecosystem. When new ETFs launch with this level of success, it changes how traditional finance evaluates risk. Think about how long it took Bitcoin to convince Wall Street it belonged in portfolios. Think about how many years Ethereum had to prove its utility before institutions took it seriously. XRP, on the other hand, is getting this moment instantly, because the groundwork is already in place. Institutional investors are not looking for the next meme coin. They're looking for assets that slot into existing financial infrastructure without causing chaos. XRP's entire design, from fast settlement to liquidity efficiencies, makes it a perfect candidate for exactly that kind of integration. And when you combine this with Ripple's recent investments and partnerships, you start to see that this isn't just hype around a ticker symbol. This is a coordinated shift toward mature digital assets that can serve real-world functions at scale. And here's one more angle worth mentioning. ETFs don't just move spot markets. They influence derivatives, lending desks, structured products, and even corporate treasuries. If Franklin Templeton joins the XRP arena, you're suddenly talking about an entire suite of financial tools built around XRP. That's when things get really interesting, because that's when real utility translates directly into market value. So keep watching the charts, keep following the news. There is more happening under the surface, and we're just getting started. Thanks for watching. Gold Rush out.